Every single day, the sheer volume of information we're hit with is incredible, isn't it? From fluctuating market movements to fresh personal finance advice and the constant churn of global headlines. It's really a lot to process, and it immediately raises the question, how do we actually cut through all this noise to find the truly valuable insights, the stuff that genuinely impacts our lives? Well, that's precisely our mission here on The Deep Dive. Consider us your essential shortcut to being truly well-informed. We meticulously sift through the latest reports, compelling data, and our own research to extract those most important nuggets of knowledge just for you.
Exactly. And for today's deep dive, our mission is sharply focused. We're going to unpack some really significant shifts that are impacting both the broader economy and, well, our individual lives too. We'll be touching on everything from how businesses are rapidly evolving to what success even means today in this rapidly changing world, and maybe even the surprising complexities hidden beneath our convenient digital lives.
Absolutely. We'll be zeroing in on the current mood in the new public offering market, IPOs, and the fascinating expansion of co-working spaces, India's growing ambition in space technology, and even how people are fundamentally reevaluating their careers and personal finances. So yeah, let's unpack this. Okay, let's start by looking at some interesting signals coming from the investment landscape. Have you noticed a change in how individual investors are engaging with new public offerings, those IPOs?
Yeah, it's quite interesting. A key insight here is the data revealing a notable drop in individual investor enthusiasm for new public offerings this year. Retail applications are down a significant 35.5% compared to last year's figures, and participation from high net worth individuals, that's also fallen by about 31% per issue. This clearly signals a shift, a shift in investor sentiment, moving away from the rush we previously observed.
Right. So what does this actually mean for the everyday person, someone who might be thinking about investing in these new offerings? Is it just the market cooling off, or is there something more structural going on here?
Good question. It really points to a deeper change in market dynamics. For example, even proposals to allow very small regular investments, we're talking, like as little as 250 euros, they haven't gained significant traction. And this is largely because the fixed costs for asset management companies, things like verifying an investor's identity, the KYC process, they're quite high. Honestly, it could take over 4 years just to recover those costs on such small contributions, which makes it simply not a profitable product for them at that scale.
Wow, 4 years just to break even on the admin.
Exactly. So the core insight for everyday investors is that the structural economics of the market are kind of nudging individuals towards larger commitments, or maybe alternative investment channels, because those traditional small investments, they're becoming less viable for the institutions themselves.
That's a surprising detail, really. Puts the economics of small-scale investment into perspective. Okay, speaking of changing business landscapes, let's pivot to co-working spaces. They seem to be absolutely booming, right?
Oh, absolutely. One major player, SmartWorks co-working spaces, is showcasing really significant growth. Their rental revenue hit over 1,280 crore last fiscal year. And remember, 1 crore is 10 million rupees. So big numbers. However, if we connect this to the bigger picture, their model is heavily reliant on leased properties. They don't actually own the land or the buildings themselves. They're operating across 50 centers in 15 cities, which is expansive, sure, but it also highlights this inherent dependency.
Right, so it's impressive growth, definitely. But with these built-in dependencies, what about their client base? Is it well diversified, or are they, putting all their eggs in a few baskets?
Well, that brings up a critical point regarding concentration risk. Over 42% of their rental revenue comes from just one industry sector, information technology, and software development. And furthermore, their top 20 clients alone account for nearly 28% of their total rental revenue.
Wow, almost a third from just 20 clients.
Precisely. So the key takeaway here, maybe for businesses evaluating co-working or for investors in this sector, is to look beyond just the impressive growth numbers. You need to scrutinize the underlying asset model are they owning or leasing, and look closely at the client diversification, because high growth coupled with high concentration risk, well, that can quickly turn into a significant vulnerability, especially if any of those top clients were to, say, prematurely terminate their agreements or just not renew.
Yeah, it sounds like a classic case, doesn't it?
Yeah.
Navigating high growth, but with a significant concentration risk. Definitely something to keep an eye on. Now, moving to the broader economic picture, the government has been heavily pushing capital expenditure, CapEx, right, through these large-scale infrastructure projects. What's the overarching goal there? What are they trying to achieve?
Right. The government is indeed heavily driving capital expenditure. Massive investments in infrastructure like roads, railways. The wider implication here, the bigger picture, is the urgent need for job creation. It's huge. India needs to generate nearly 7.5 million new non-farm jobs annually until 2030. That's a massive number. And manufacturing is expected to play a crucial role in this. It's seen a rising trend in capital expenditure already, partly benefiting from global companies looking to diversify their manufacturing bases, moving away from certain other regions.
Okay, that makes sense. And that ties directly into the real estate sector as well, doesn't it? I mean, all these new projects must be driving demand for both commercial and residential spaces.
Precisely. Yeah, major real estate firms are seeing really strong performance. One prominent company, for instance, reported record residential sales bookings of over 21,200 crore last fiscal year, which is a significant jump, 44% up from the previous period. And they anticipate their rental revenue from commercial properties will surpass 10,000 crore in the medium term. So they're accelerating capital expenditure for new projects in key cities. It really indicates continued robust demand and investment in the sector, fueled by both that broader economic growth and, crucially, the need for these new job centers.
So as India's physical infrastructure and real estate sectors see this immense growth in investment, it makes you think, doesn't it? How is our digital infrastructure evolving alongside it? We often feel, a sense of pride in India's digital public infrastructure. Think QR codes at a fruit shop, seamless digital payments with UPI. But is there a hidden side, a more complex dimension to this technological marvel that we might not be seeing?
That's a really important question. It brings up this crucial point about the balance between convenience and privacy. While systems like Aadhaar and UPI are, rightly celebrated for their efficiency and reach, some experts are voicing concerns that they've inadvertently created an unprecedented infrastructure for potential state surveillance, given the vast and centralized collection of personal and biometric data. So the core insight really is that as we embrace these digital marvels, society has to proactively address this fundamental redefinition of privacy, of implied consent, in a world where personal data collection is increasingly vast and, well, frictionless.
So the very systems designed for public good could have these other pretty significant implications.
Exactly. And we've seen this debate play out globally, haven't we? There was a recent jury verdict in a prominent case overseas, found a major tech company liable for misusing customer cell phone data without explicit permission, even when the devices were just idle, not actively being used. And this really challenges that long-standing model of implied consent in the tech industry. It's pushing towards a future where user permission has to be explicit, it has to be granular, and continuously managed. So the big question becomes, will India also need new legislation to address this, especially concerning data collected by public institutions like those behind Aadhaar and UPI?
That's a truly significant shift in how we might need to think about data ownership and consent. Definitely food for thought. Now let's pivot a bit. From personal data to the vastness of space, India's private space sector seems to be making serious headlines lately. What's driving this newfound momentum, this global attention?
Yeah, it's really compelling, isn't it? What's particularly fascinating is how India's National Space Agency, ISRO, is actively transferring its key technologies, like those for small satellite launch vehicles, the SSLVs, transferring them to the private sector. This is a very strategic initiative. The aim is to position India as a global hub for launching small satellites into lower Earth orbit. It's a deliberate, long-term play to foster a robust private space industry and build a whole national ecosystem around it.
Okay, building capacity internally. But why is India emerging as such a key player globally in this field, beyond just its own development?
Right. Well, if you place this in the broader geopolitical context, it becomes clearer. Many nations are now looking to India as a reliable supplier for space defense and surveillance infrastructure because, well, traditional suppliers are becoming less viable due to various conflicts or maybe just high costs. So companies here in India are bagging contracts that can be worth over $1 billion annually just for providing satellite data. It's creating an entirely new sector, one that could give India immense geopolitical influence extending far beyond its borders.
Wow. So from micropayments on the street to macro strategies in space, India is really flexing its digital and tech muscle on multiple fronts. But, the tech world is also seeing fierce competition in another huge area, artificial intelligence, AI. How is the AI race shaping up for the big players right now? What's the state of play?
Oh, the AI race is relentless, absolutely relentless. Major players are constantly releasing new models. One prominent AI developer, for example, is focusing on making its future models more autonomous, trying to reduce hallucinations. That's when AI models generate convincing but factually incorrect information. and also improving memory and reasoning capabilities. However, they also face significant challenges. Multiple lawsuits over their use of training data, for one, internal concerns about AI safety, too, and of course, intense competition from rivals offering faster, cheaper models.
Right. You mentioned the market is increasingly shifting towards more open and flexible AI solutions. Now, while that sounds beneficial for competition, maybe more accessibility, could this kind of decentralization also introduce new challenges, thinking about things like quality control, safety protocols, or even the spread of misinformation?
That's a very perceptive question. Absolutely. While open models definitely democratize access and can foster incredible innovation, they do present a whole new set of challenges. Challenges around governance, responsible deployment, preventing misuse. It's a really complex trade-off. And you see regulators globally grappling with how to balance these competing demands as the technology just evolves so rapidly.
Okay, let's turn our attention now to something deeply personal for many of our listeners,
Mhm.
the idea of home, and maybe career too. We're seeing what seems like a significant trend of non-resident Indians, NRIs, making their way back to India. What's prompting this widespread homecoming?
Yeah, it's a really interesting phenomenon, and it's complex, driven by both pull factors and push factors. On the pull side, many are returning for entrepreneurial opportunities in India's thriving startup scene. That's a big one. Or maybe the desire to raise children closer to family and culture. Or even to retire comfortably with lower living costs and accessible health care here. But then there are the push factors from abroad, too. Things like tougher visa regimes, sometimes onerous taxes, job insecurity in certain sectors, or just the soaring cost of living overseas. So it's really a confluence of factors making India an increasingly attractive, or perhaps in some cases, a necessary option.
Okay, so for our listeners who might be considering such a move, or perhaps know someone who is, what does this all mean beyond just making the decision itself? What are the practical implications? It sounds like a huge life shift.
Oh, it's massive. It's definitely more than just packing bags. It requires meticulous planning, really meticulous. We heard from individuals like Vikrant Gupta, who returned after 14 years abroad. He had to adapt to a vastly different lifestyle and ensure he had substantial financial runways, basically a safety net, for establishing his new business here. Then there was Ronak Gala, who made a more impulsive switch to be closer to family. He emphasized the critical need to ensure that kids' needs were met smoothly, and the challenge of building a new social life completely from scratch. Others, like Palak Chauhan, meticulously planned their move around precise financial calculations. They wanted to pursue different career paths in India, even knowing that matching previous overseas incomes just wouldn't be possible. And then there are the practical steps, right? Converting bank accounts, disclosing foreign assets properly, updating all your documents, securing new insurance coverage. It really does sound like a complete reevaluation of one's entire life and priorities.
A complete reevaluation.
Yeah, that sums it up well. And that brings us nicely to another fascinating shift: how we define a dream job today. It seems to be fundamentally changing, doesn't it? Especially maybe for younger generations.
Yes, absolutely. Interestingly, there's a really clear shift away from previous generations who might have prioritized, say, duty or very traditional hierarchical career ladders. Recent surveys show that a huge majority, 82% of Indian professionals, now prioritize work-life balance just as much as financial compensation. That's a major change. So the dream job is no longer this one-size-fits-all concept. It's much more about autonomy, finding purpose and having flexibility. For example, one software developer shared how he now deliberately shuts down his laptop by 6 p.m. every day to teach his daughter. That's his priority. And we heard from a former marketing manager who now runs a small content agency from Goa. She earns less, sure, but she deeply values the newfound freedom and lifestyle. So it's becoming less about the job title, maybe the corporate prestige, and much more about how the job truly integrates with their desired lifestyle, their personal goals.
Precisely. But this also highlights a crucial point, maybe a potential downside of this trend. Some people are finding that even in, say, social impact roles, the passion for the mission can sometimes be, well, weaponized to justify overwork, leading to what one person cleverly called burnout with better branding.
Mm.
It really underscores that a healthy work culture is paramount, regardless of how noble the job's cause might seem. So the insight here is that while flexibility and purpose are key, we also have to be vigilant against these new forms of maybe exploitation of one's passion.
That's a really important nuance. Burnout with better branding.
Hmm.
Okay, so for our listeners who are navigating their own financial paths, trying to make sense of all these shifts, what's a practical, actionable takeaway from all this about managing their financial identity? Something they can actually use.
Yeah, a really critical consideration is your credit score. It's such a fundamental part of your financial identity these days, and the single most important factor influencing it: consistent, timely payments. It sounds simple, but it's key. Even one single missed payment can significantly hurt your score. Also, be mindful of your credit utilization. That's how much of your available credit you're using. Aim to keep it below, say, 30–40% across all your cards. And importantly, if you're dealing with overdue loans, try to avoid the trap of borrowing more just to repay existing ones. That can spiral. Instead, maybe strategize. Prioritize clearing the smaller, unsecured debts first. Get those out of the way. These kinds of steps, they can significantly improve your financial health and open up better options for you down the line. So, as we wrap up this deep dive, we've touched on some pretty profound shifts, haven't we? From the subtle changes in our economic landscape, the evolving nature of digital convenience and its trade offs, to how we define success, how we manage our personal finances, it's really clear that everything is in flux.
It truly is. Yeah, these insights, they really show us that seemingly disparate headlines, they're all deeply interconnected. They reflect these deeper currents flowing through our society and impacting our individual aspirations too.
Exactly. And ultimately, what does this all mean for you, our listener? As you reflect on these trends we've discussed, maybe consider how these shifts might impact your own decisions. Decisions about your career, about investment, maybe even just your digital comfort levels and expectations.
And perhaps the most provocative thought for you to chew on as we finish. How quickly will these ongoing shifts redefine what we all consider normal? And looking ahead, what new opportunities or maybe new challenges might emerge as our very definitions of success and progress continue to evolve in the years to come? Thank you so much for joining us on this deep dive. Until next time, keep learning, keep questioning, and stay well informed.